Good morning, everybody. Hope everyone's doing wonderfully well as we get started on this Wednesday morning. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we're going to get right into the nitty-gritty charts. Remember, no BS, just charts, which equal probabilities in our trading lives. So that's, again, where we go to find security. Not that we'll win all the time, but ultimately that we can have a high win rate and ultimately the numbers take care of themselves. So first and foremost, we're going into the day today with basically a market that is neutral to positive. We did get some poor earnings from semiconductor stocks, so those may be under a little bit of pressure today. But let's start out with the S&P 500, and this is the S&P futures, and this is what we've seen overnight, right? So if we look at, I always like to look at where we closed yesterday. So we closed right here yesterday on the markets. And today you can see, or overnight, we were trading down a little bit, then had a really good rally in the late night, early morning, and we faded here as we've gotten closer to the market open. So again, a little bit of a fade. We are inching up here on the 10-minute chart. And again, the 10-minute chart, that means each of these candles is 10 minutes long. It gives us a good basis to look at what happened in the overnight and also where the market was yesterday at the close and where it will open here. So not a big gap up, but about 14 points higher, or $1.50 on the, or $1.40 on the S&P 500, or SPY, I should say. Now, speaking of the S&P 500, let's flip over to the daily chart. We do have some new developments here that are starting to show themselves. This is the parallel channel that I've shown you guys the last few days in the game plan. And the reason why this is important, folks, is, again, this marked literally to almost the penny the high on the gap up last Thursday when Meta and Microsoft gave us good earnings and those stocks had major gaps to the upside. But again, notice the fade, the big sell-off, the continuation on Friday after the non-farm payrolls report. Now, what's the new development? The new development is what is forming here. So if we look at this pattern formation, you have the reversal candle, the continuation, and then since then, we've gone into this type of pattern. And again, those of you that are new, you may not know this pattern, but that's why I'm here to teach you. But essentially what we get is when you have a sharp down move, especially coming off of highs like this, and you get this sort of pattern formation, this is known in technical analysis as an in spirit of bear flag. All right. Now, bear flag would be a right angle. So again, a perfect textbook bear flag would be a right angle. This is a little bit of an incline, which means that ultimately we call it an in spirit of bear flag. Ultimately, that is a bearish formation on the chart, and we want to be aware of it. Now, I want to caveat that with saying that we only have a couple inside bars here so far. So really a good bear flag, or in spirit of bear flag, will have between 5 and 7 candles that are inside of it. This one only 1 and 2. You wouldn't include this one because this is part of the flag pull down, right? But again, inside bar, consolidation, slight uptick, right? Overall, an angle to the upside as my parallel on either side is. Now, again, the key is it's an immature pattern, which means, again, it could change here. It has a high probability of changing, but right now, again, the formation would fit into a bearish consolidation pattern, or an in spirit of bear flag. And that would insinuate that at some point here in the future, we could see a down move in the markets, continuing the move to the downside. So that's how these patterns resolve themselves in general. And remember, we're speaking in terms of probability here. Probability-wise, if you get a good solid bear flag, or in spirit of bear flag, it can resolve itself to the downside, and that is favored via probabilities. Okay, so I wanted to go over that. I thought that was very, very important overall. If we take a look at the dollar kind of had a minor bear flag here. Notice only 2 candles, so we wouldn't consider it a full-fledged mature pattern, but nonetheless, it is sideways after a big sell-off. So you can see that sort of resolving itself to the downside as well on the US dollar. And don't forget, we have this bigger parallel here, which has literally marked the low here to the high, and then that same parallel. And I can show you how I find these things. I literally just connect the dots with a parallel and I drag it down, and I'm like, holy cow, look at that. Exact low to exact low. And that, again, gives us a basis to understand that if we sell off, you would buy the dollar, the DXY right here, and also look to potentially short it at this upper range. You can see it trades from the upper range to the lower range, back to the upper range, and back and forth. And so parallels, again, for me, folks, are unbelievably helpful in terms of picking tops and bottoms in the near term. And again, it's important to realize and recognize that the patterns I'm showing you, when they only go back a few months, they're near-term patterns, right? They're not telling me where the dollar will be in a year from now, or 2 years, or 5 years, or heck, even 6 months. But they're giving me the ability to pick major tops and major bottoms or reversals in the movement of the dollar or any chart over the course of days or weeks. And that's, again, what a swing trader lives in, because I can make so much more money by going long and then going short and then going long. And you could actually see a price of a stock that doesn't move. Like, I mean, volatility wise, it goes up and down, but maybe over the course of a year, it just is in the range of sidewaysness. But ultimately, as a swing trader, the goal is to be able to make 10, 20, 30% on that equity or that crypto or that commodity during that period, even though the long-term investor might still be flat on their longer-term trade over time. Very cool stuff, again, guys. And I always love enlightening you guys on this sort of mentality of essentially grabbing your financial situation by the reins, right? By the horns, and taking it into your power versus just kind of being like, oh yeah, I'll just be a long-term investor. And listen, long-term investing has its place, no doubt about it, assuming you don't get whipped out when you have a financial crisis like we did in 08, 09. So many people got whipped out during that, sold at the lows, and then again, obviously markets came back up. All right, so the 10-year yield upticking just a little bit. We really don't have a lot of economic news this week. I'm curious to see the jobless claims tomorrow, just because, again, we saw the weak jobs numbers on last Friday. But again, notice we had a great breakdown of the wedge. I still think now the bias is down to the downside, but just because you have a downside bias doesn't mean in the charts that you won't see a little bit of a bounce back, right? I mean, you can always, charts don't go like this. They don't just go straight down, right? They go down, then they bounce, then they go down more, then they bounce down more. And so the key is your bias on the 10-year, as long as you remain below this wedge pattern right here, this trend line essentially, is to the downside. But in between there, you can get small bounces off minor supports. Here's a minor support. Here's a minor support. Here would be a major support, because this is the major pivot low where you had a big move down and this was the lowest point, and then a big move back up. But again, the point being is that the bias would remain negative on the 10-year yield, even with bounces along the way, which should be expected. All right. Couple earnings notes here, guys. We are seeing NVO here dropping on earnings. This, again, is the Wegovy GLP-1 maker. They reported earnings this morning. That stock is coming in. There is a key level down here that I'm watching. And again, we're just below it right now in the pre-market. But this pivot low going back to 2022 is potentially some support. So I'm keeping a close eye on this in the near term here today. If this really does break this 45, 44.75 level, then really you don't have another major level until you get down to about 37.50. And really, this is an amazing fall from grace, considering that this was pre the GLP-1. Here was your run from basically $47 to $150 on the weight loss, and it's now done a round trip all the way back down and potentially trying to break this low right down here, which could send it back to 2021 levels. And again, really amazing. Now, Eli Lilly is the other player here, and they've obviously gotten more market share. So yes, they've come down, and you can see an old trend line there. But again, the performance of the stock is much better. I will say this, though, as you slowly get more and more knockoffs in that sector on the weight loss side, I do think you're going lower. The next big support, there's a gap fill right down here around 667, pivot low. That'll be a support. That would not be a big bounce level, though. You'd probably get a technical 1 or 2 day, maybe a 1 week, 2 week bounce. But ultimately, same thing. If you see Wegovy, the Wegovy maker, Novo Nordisk dropping, eventually I think that catches up to Eli Lilly. I would start getting interested in Eli Lilly down here at this. You'll see you had this big move up and then the consolidation. There's a gap, huge gap on the charts. You can see it right here to here. If we filled that gap, that might be a time to nibble. Now, let's get into some of these semiconductors. Take a look at SMCI pre-market. A major drop here, folks, on SMCI, down about 17 to 18%. Again, they missed earnings and revenue numbers. They didn't have strong guidance either. And that stock, again, is cratering. However, I've isolated my day tradable zone today. It is between 45.85 and 44.15. Notice how price rallied up and it stalled out, and then it came in, and then it came up and it stalled out, came up, stalled out, came up, stalled out, and finally broke out. And then look at how right here price kind of came back to the top of it and tried to break back down but couldn't. And that tells me there's a lot of support in here, right in this range. And so I'm not sure exactly where I'm going to day trade it specifically at my entry, but I may start a position in the live day trading room, let's say around 45.75. And then I can always add every 50 cents to the downside dollar cost average. And again, we should get some sort of bounce, even if it goes down to about 44 to 44.15, right in this lower range. There should be some technical bounce. Now, would this be a swing trading level? I personally will not do it here. Only a day trade for me. Swing trading wise, I would look for a lower move. Again, if you're in a semiconductor sector that is already at all-time highs, and this one is performing as poorly as it is, I would be much more interested in at least waiting till it gets down to around 36.70 or so. This longer term trend line right here should be some good support. So day trading wise, this is my zone here, $45.85 to $44.15, all the way down, swing trade potentially in the 36 range. AMD. AMD is also getting hit. It's not as big a hit as what we're seeing in SMCI because, again, they didn't really have as big of a miss. But overall, the stock had rallied so much. If we go to the daily chart, look at the run that AMD has had from $76 to $183 in recent trading days. Notice, again, you got your reversal inside kind of bearish pattern, kind of like what the S&P is showing, and then we're going lower today. Now, again, it's not a huge move lower, but it is a nice one. For me, the only level that kind of stands out here, again, this is pretty far away, but there's a 146.27 gap fill, and you can also extend that out. Look at how this extends out beautifully to knock into this pivot high as well. And that tells me this zone is going to be a tremendous support. I even like this one as a potential swing trade level because of the high pivot and the gap fill. And again, in all fairness, AMD reiterated how strong AI was. They just didn't, again, come quite to the level because the stock had rallied up so much that they had to put up basically unbelievable numbers to keep the stock going up. And so you're seeing some profit taking today. And also keep in mind, semis have just run a little too far, too fast overall, and they're due for a correction. All right. Snapchat. Snapchat is getting hammered, almost down 20% this morning. And we can see, again, the big drop on earnings, big move here. Take a look. My level is pretty obvious here. It's a pivot double bottom right here around the $7.12 level. So again, right now we're at 769. If this level comes into play, we should get some technical bounce here. Notice you're below this level and you're kind of, if you're really aggressive, you could try the 750 pierce. But again, for me, playing it a little bit safer, a technical day trade around $7.12. On a swing trade basis, where would I look? Oh, man, this is tough because you have to go way, way back. Probably a swing trade at double bottom from 2018, around $5. And again, I know for bulls, they don't want to hear that. And maybe it never gets there, right? I'm not telling you where it's going. I'm telling you where, if it goes there, where would I buy it, right? So again, I think that's important to understand. When you get a bear flag, we can say, okay, the probability is this is going down. When you're looking at a stock that's already cratering on earnings, for instance, like Snapchat, it's not so much about, okay, well, where's this going now? Because it's already fallen, right? We don't know, is it going to stop where it is now? Is it going to bounce? Is it going to go lower? But the point being, a good trader scopes out where the high probability level will be if it gets there, where the bounce will come in. And that's so important, folks. So important to understand the mentality here. Again, you're not really trying to guess if it's going to continue down. You're saying if it does continue down, then this will be a high probability level to trade. All right. Let's go on here, guys. We have earnings this morning. Uber reported earnings. Again, you can see from yesterday's closing levels, the stock is just fractionally down. So anytime as a trader that a stock is barely moving, like up or down a few bucks on a, in this case, an $89 stock as of yesterday's close, this isn't going to be something where I'm going to be like, oh, there's a day trade here, right? Because there's not enough price discovery. Essentially, this is really key, guys. So as a day trader or a swing trader, what you're looking for is abnormal volatility, which means abnormal emotion. And so a day trader or swing trader is looking for where people are panicking and they're basically throwing the baby out with the bathwater, as the old term goes. And they're just dumping because they're panicking, not because they're making analysis and saying, oh, this is going to go lower, but because they're getting irrational. And same thing on the upside. You're looking for crazy moves to the upside where people are just buying because they think it's just going to go up, not because of any other factors. Essentially, greed takes over. And that's where a good day trader and swing trader can be a counter trend trader. They recognize the abnormal emotion and they can say, okay, well, we're slamming into this major resistance with abnormal emotion. We should see a retrace in price. Price has gotten out of whack too much. It should come back in this direction. Very, very important, guys, and understanding. And by the way, part of that is you getting your minds right, right? So it took me a long, long time to get my head to the point where I wasn't thinking emotionally, where I was looking at a chart and making decisions purely based on what the chart was saying. But once I do that, it's unbelievably freeing. It's to a point where you start to say, okay, I'm not going to get caught up in the emotion. In fact, I use the emotion as a contrarian indicator to really go the opposite way. Very cool stuff. All right. In any case, Uber, nothing going on here, barely changing on the day. Shopify, on the other hand, great move on Shopify here, folks. What a monster move up. Notice this trend line. I'm going to show you why this trend line is interesting to me. If you look at the chart and we zoom out on the chart of Shopify, look at this upsloping trend line. All right, now we're trading right around it, so it makes it a little trickier to day trade it. But isn't this an amazing trend line? The high here before a good pullback, pullback, big pullback, smaller pullback, big pullback. And sure enough, where are we? We're right up around this 148 level. Now, in addition, what's interesting here is we also have some other factors. So again, if we look at this chart, we have a high pivot. It's a little bit of a small mid-level pivot, but 153. And then if it does go up a little more, obviously you have your double top up here at 176 or so. But I'm interested at a Pierce today of 150 using the even number as a potential shortable level on Shopify with this monster move in the pre-market. Again, right now trading at 147.50. But if it gets up to 150 Pierce, I might be looking at a day trade on the short side. All right, next up we have Disney. Disney is trading fractionally lower. Again, same thing. Closed yesterday at 118. It's trading at 117. So is a dollar move on $100 stock even going to get me out of bed to look for a day trade? The answer is no. You just throw it out the window right now. Now, it doesn't mean that later today, if it goes crazy and collapses during market hours, that this couldn't come back on my radar. But right now, it is not on my radar. And same thing with McDonald's. McDonald's, again, reported earnings. The stock is up. Yesterday, it closed. Let me see where it closed yesterday right here. So it closed at 299. It's trading at 308. That's an okay move on it. And we can look at this chart. So 308, my first level would be gap fill at 320. Basically 320, you have all this high area up here, gap fill right here and high pivot. So right around 320, still about, in all fairness, $12 away. That would be a pretty big move for this stock. But if it gets there, that would be a good tradable level. All right, flipping over to Bitcoin real quick. Bitcoin, again, guys, continues to kind of just chop in this range. What type of pattern could this be creating? This could be creating a flag pull down, inside bar consolidation. Again, somewhat preliminary, just like we were talking about on the S&P. But again, are we starting to kind of do this type of pattern that could denote an eventual breakdown of the 111,800 level and then a move to the 108? So let's keep an eye on that one. Quickly, we'll go over Ethereum. I try to go over Ethereum every so often. Really not a whole lot to dissect here on Ethereum. Notice again the ETH chart, the high pivot here to the high pivot here. That gave us this high right there. It rejected price. Price then bounced just like with Bitcoin and has come in the last couple days. My buy level on ETH, if it ever comes back to it, see this high where it consolidated right here. right through here, right around 2,800 on ETH would be for me a good buyable level if it comes back there. If it doesn't, then I miss the trade. And again, I miss hundreds of trades every single day. It's all about, do I catch one or two? And by the way, yesterday, folks, yesterday in the game plan, I gave you guys a Palantir trade. I took it in the live day trading room. We maneuvered beautifully and took about $8,000 on that trade with the live day trading room. So again, this is what I do. It's finding the levels and then saying, okay, where are the high probability entries? How do I maneuver in this position, build a core position for a day trade, and then let it pay us out most of the time? All right, so that's interesting to see right there. Let's go into gold real quick. Let's see what gold is up to. Gold continues to hover. It is very close to major resistance. It's already looking like it's losing a little bit of steam, and gold today is down. Nothing much to talk about here other than that it still has a short-term bearish bias, although please understand that the mid and long term remains very, very bullish. Only short-term bearish because of this resistance right here. If price can get above it, okay, game on to the upside. But as long as it's below, we can't as traders, right? Only if you use emotion are you going to be like, oh, it's definitely going to get above this level, right? That's emotion speaking. Chart-wise, the lines are there. It's like a ceiling. Like, you can't assume you're going to bust through the ceiling. You don't know, is it a brick, a cement ceiling, what kind of ceiling it is. You have to respect it until it proves that it can push through. Next up, let's quickly look at silver here. Go to silver. Silver continues to inch up. Really on silver, it's got to take out this orange trend line, which is around 39.50 for the bullish bias to regain. Other than that, this could be a little bit of a bear flag going on there. Oil, let's take a look at oil. By the way, guys, I did exit my oil trade yesterday, really right at this trend line. See this trend line? It's a beauty. Pivot low here, and then right there yesterday. So with my commodity members, Smart Money Commodities, we exited SCO. We had bought SCO because it's a 2x short ETF, and we got out right there for a 13% gain in a matter of 4 to 5 trading days. So beautiful right there. But you can see why I got out. Now, by the way, I want to be clear. This to me still looks like a flagpole with consolidation. So overall, I still think it's going lower, but the key is to understand that just because you think it's going lower doesn't mean that you can't exit a swing trade and then wait for a bounce and always re-short it if you want. And in fact, I could get a better entry right now just by, from where I exited, by just entering it today. I'm not going to do it today. I don't have the signals I want. But my point is that a swing trader is always maneuvering, looking at the levels, taking a little here, taking a little there, and it all adds up to big profits potentially. All right. Natural gas hovering right here, still holding this key level of support. If it does break, we know our 263 level should be significant support. And again, we'll see what happens here. I don't have a good read on the chart right now on whether it's going to break in the near term or go a little bit higher before it comes down. But ultimately, the bigger pattern is still a head and shoulders, which would be considered bearish. So the bigger term pattern or the longer term, like let's say month, 2 months out, is bearish. But in the short term here over the next few days, I repeat, I do not have a good read on this chart. And that's okay to be, right? You don't always have to have a great read on the chart. Sometimes, in all fairness, most of the time, it's just like, okay, the chart's not giving me a great signal. It's when you get the good signal that you jump out of your seat and say, okay, that's a trade because now that fits 75% win rate or 80% or whatever it may be, that is your threshold. All right, guys, I got to get over to my live trading room. Thanks so much for coming out and watching the game plan this morning. Of course, I'm still on vacation, but as always, folks, I'm here as long as I am able to give you your game plan and your setups for the day. Have a great rest of your day, guys. I will talk to you soon.